5 seconds to the open.
You ready?
Who wants to get this thing started right about now?
Welcome to Follow the Money Weekly with your host, Jerry Robinson.
Welcome.
Not just some guru.
Oh, really?
Your host is an economist and a best-selling author.
What an interesting news item. I'd better write that down.
And just someone who likes to make money and help you to make money. Welcome to Follow the Money Weekly. And here he is, Jerry Robinson.
Friends, welcome to you all around the world. Welcome to Follow the Money Radio. So grateful to have you here. We have an incredible show lined up for you today. You know, it was 10 years ago today, on October 31st, that marked the publication of a white paper describing a new peer-to-peer electronic cash system based upon something called blockchain technology. And this brand new white paper was describing a concept known as Bitcoin. Now, this innovative white paper described not only a new way of thinking about money, but it also sought to restore power back into the hands of the people who had become victim of the global fiat paper monetary systems. In the fall of 2008, when the Bitcoin white paper first appeared, the world was dealing with a global economic crisis. You remember, it was spawned by greed and over-leverage that led to the bailout of banks and corporations, courtesy of taxpayer-funded subsidies. Lehman Brothers had just declared bankruptcy, and the global economy faced a deep recession, and there was growing demand for alternative investments. And it was into this era of privatized profits and socialized losses that Bitcoin burst forth. And that was 10 years ago. So happy 10th birthday, Bitcoin. You know, since then, Bitcoin has risen in price from just a penny to around $20,000 back in December of 2017, just a few short months ago. Today, the price of Bitcoin now sits just above $6,000, and it's been very stable above that price for the last several months. Now, today, more than 3,000 cryptocurrencies with similar ambitions to Bitcoin have arisen, leading to what one could only describe as a cryptocurrency revolution. Today, the total value of all of those cryptocurrencies stands at around $200 billion, and Bitcoin makes up more than half of that total. And as we start to reflect on the first full decade of cryptocurrencies, it's only natural to ask, what does the next decade hold for cryptocurrencies and cryptocurrency prices? And in my opinion, the next 10 years will provide even more opportunities than the last 10 years did. And this is because cryptocurrencies are literally changing the way that money is viewed, the way that money is handled, the way that money is transacted, and even how money is managed. We get the latest glimpse of this with a huge headline that came out last week, and when it became known that Fidelity Investments, which is it's the fourth largest asset manager in the world and has over $7 trillion in client assets, suddenly announced, and I say suddenly, I really shouldn't stress that because Fidelity has long been in the crypto space, but they announced a brand new and separate company known as Fidelity Digital Asset Services. And this brand new firm is basically going to serve as a custodian for cryptocurrencies for many institutional investors. You see, up until this point, institutional investors have been a little gun-shy about getting into the space. Although we have seen some institutional inflows into the cryptocurrency space, there's still a ton of money sitting on the sidelines. And the reason is because just like you're worried, anybody out there who's listening to this podcast who has bought Bitcoin or has bought cryptocurrencies, and you hear about it all the time, that these things can be hacked. And so there's a lot of nervousness on the part of institutional investors. When they're messing around with millions or even billions of dollars, and in the case of Fidelity, trillions of dollars, you don't just jump into a brand new asset class blindly. You want to make sure that you have security, that you have protection, the same way that many of these asset classes that are invested in by current institutional investors, they have protections. If you invest in equities, you have the SEC. You have, if you're investing if you put money into a bank account, you have the FDIC. Now, whatever that's worth, but still, it's the perception of protection. And by Fidelity stepping into the world of blockchain, becoming the very first major Wall Street trading desk, allowing institutional investors not only to trade and buy cryptocurrencies in a way that, is sophisticated enough for them, but in addition, giving them the peace of mind of knowing that Fidelity will actually keep those cryptos safe. They will store those cryptos and keep them in a safe manner, is going to lead to a lot of institutional investors to thaw on the idea of moving in to the cryptocurrency asset space. When I saw this headline last week about Fidelity jumping into the crypto space here and opening up a trading desk and serving institutional clients like hedge funds, I told our members, and I've also told friends and others, that this is by far, in my mind, the biggest headline in 2018 for cryptocurrencies. Fidelity's move here is a huge step in favor of cryptocurrencies. It's also been very interesting as we've been watching cryptocurrencies in recent months, and especially over the last few weeks, as we've seen volatility strike the stock market. We've seen cryptocurrency prices really act in a non-volatile way. In fact, we have seen Bitcoin holding, as I mentioned earlier, above $6,000 for some time. Ethereum holding around that $200 area for quite some time. And even Ripple holding right around it, to a lesser extent, but holding around a similar area. So what we're seeing is that, interestingly enough, at a time of great equity volatility, where equity prices are kind of, yo-yo and kind of a basket case, we're seeing cryptocurrencies actually act in a non-correlated way, right? I mean, they are not, there really is no direct correlation here. And so what's happening is that many people are considering, cryptocurrencies as a potential new addition to their portfolio to act as that non-correlated asset to provide some sort of hedge in the middle of volatility. And so this is huge. And then, of course, we have to recognize that cryptocurrencies also bring something to the table that many investors are interested in, and that is that many cryptocurrencies, like Bitcoin, are finite in nature. That is, they cannot be printed at will, like these global paper fiat currencies that we have today that are administered and printed at will by the Treasury Department here in the United States, or in other, other top financial government heads of state in other areas, or, of course, the Federal Reserve, of course, gets involved with its usury and begins charging interest on these paper currencies. It's just a nightmare, and it continues to be a nightmare. And as many people wake up to the fact that paper fiat currencies are not the future, Bitcoin and these other cryptocurrencies are becoming more attractive. And I think as we continue down this road, where we see more and more breakdown of trust in the institutions, both here in the United States, these democratic institutions that we have, and other places as well, cryptocurrencies are going to be a beneficiary. Not the only beneficiary. Obviously, gold and silver and other traditional hedges will also be beneficiaries, but cryptocurrencies now have a seat at the table. And by Fidelity jumping in to this space, it really provides a lot of legitimacy and allows these institutional investors in. And because these cryptocurrencies, many of them like Bitcoin, have a finite supply, as institutional investors begin to pile in, you're going to have prices that are going to spike, right? Just simply, that's just how it is. You're just going to have prices spike. And for this reason, it shouldn't be surprising that many millennials are jumping into cryptocurrencies. A new report was put out that showed about 31% of millennials want to use cryptocurrencies, and 25% of quote-unquote affluent millennials, according to this report, and we'll put it in the show notes, hold cryptocurrency. So the new generation is beginning to adopt cryptocurrency. So this whole thing is out of the gate. I mean, there's really no way to put the genie back in the bottle, so to speak. Cryptocurrencies are here, and they are here to stay. And this is not, of course, to suggest that there will not be ongoing battles, legal battles, and, of course, governments trying to prevent the spread of cryptocurrencies. Not to say that at all. We expect the governments to fight against a competitor to their monopolized monetary systems. But nevertheless, it's very difficult to imagine how cryptocurrency could be put back into the bottle, how the genie is put back in the bottle. There's just no way to envision that in my mind. So therefore, you just have to have a plan. Are you investing in cryptocurrencies? Do you have access to cryptocurrencies? The world is changing. You know, back in 2013, right here on this podcast, I began advocating that everyone should become familiar with cryptocurrencies because it was a new technology that looked very promising. And I even said on this podcast many times, and especially to our members, that they should consider just buying one Bitcoin. Now, this is back when Bitcoin was less than, $250, and it was reasonable to go out and purchase one. Today, at more than $6,000, that's not possible for everybody. They just can't go out and just buy a Bitcoin today. But that was possible in the past. And I think as we go forward in time, the cost of one Bitcoin is going to become increasingly too out of reach for the average person to buy. And so for a long time, we have been advocating that you should have at least a familiarity with this space. And one of the best ways to get familiar is to go out and purchase it. I remember when I was purchasing cryptocurrencies back in 2012, 2013, many of you know my story. I was introduced to cryptocurrencies by Trace Mayer, who's been on this program. In fact, we had him at our last Follow the Money Summit back in 2018, or actually earlier this year. And we told that story. But I got exposed to cryptocurrencies fairly early in the game. I've been a long-term investor now in cryptocurrencies. And I currently keep 5% of my total investable assets. That's all the money that I can invest, whether I wanted to invest it in real estate, or I want to put it in gold and silver, or if I want to put it in stocks or ETFs or whatever. Well, of that money that I can invest, not my savings money, not my money that's locked away in a savings account, but the money that I actually have for investing purposes, 5% of that, I just keep exposed to cryptocurrencies. And I haven't raised that level yet. I might raise that in the future. But so far, that's served me very well. And I also keep those cryptocurrencies in something known as cold storage. That is, I keep them offline. I don't leave them online. I don't leave them on an exchange. Instead, I keep them on a hardware wallet. I particularly use two. I use Trezor, and I also use one called the Ledger Nano S. And so anyway, there's a lot more about that on our website. For all of our members, we've done many different topics on cryptocurrencies and cryptocurrency investing and how to purchase your first Bitcoin and how to get it, which cryptocurrencies we like. We actually have a portfolio that we share all of the cryptocurrencies that we like and that we own personally. And you can find that right there on our website. If you just go to followthemoney.com/crypto2018, you can see that report is made available to those of you who are not currently members. You can purchase it, or you can upgrade your account to be able to get access to that. But we have a new one coming out in 2019, a brand new crypto portfolio where we're going to be adjusting, right? We're going to be, probably moving around some of the cryptos that we have. We found a couple of new cryptocurrencies that we feel have a lot of promise, and we're going to be releasing those in the 2019 crypto report. That's going to be coming up, of course, in January. But I'm really excited because not only do we have this new report coming out, we also are going to be diving into the topic of cryptocurrencies at our upcoming 2019 Follow the Money Summit. That's scheduled, by the way, for May 31st, 2019. And it's going to be held in Rogers, Arkansas, Northwest Arkansas. which is where the same area we held the 2018 Follow the Money Summit, and we had a blast. And this time we're going to have an even bigger blast. We're going to be talking about cryptocurrencies there. It's going to be a getting really good time. Stay tuned for more details about that upcoming summit in 2019. Again, the date is May 31st, and we'll have an optional second day on June 1st for those who make it out. But we'll be providing you more information about that. By the way, for those of you who are not currently getting anything from us by email, if you're not currently a member in any way, you can always just join as a bronze member. Go to followthemoney.com/subscriptions and see the different plans that we have. And if you're not able to become a paid member, well, then you can become a free member. And you can do that simply by going to our website and signing up. You can see that right there on the front page, how you can begin getting emails from us, and that way you can stay in the loop as to what we have coming up as far as live events. So in our next segment, I'm going to be joined by the founder of one of the world's leading cryptocurrencies. His name is Paul Snow, and he is the CEO of Factom, and he is the architect of Factom Protocol, a very innovative and interesting cryptocurrency that is making waves around the world and actually has plenty of use cases and has a lot of practical solutions for corporations who are wanting to get involved in blockchain technology. So stay tuned for that interview right on the other side of this break. Hold tight.
Are you prepared for the next stock market crash? It's not too late to protect yourself and your family with Jerry Robinson's best-selling book, Bankruptcy of Our Nation, now in a new audiobook format. Whether you want to listen in the car, at the gym, or on your iPad, we've got you covered. Get the entire 300-page book in audio format for only $24.95. That's over 12 hours of Jerry Robinson's economic wisdom, financial insights, and practical money-making strategies for only $24.95. Inside this new audiobook, you'll learn 21 profitable income streams you can create both now and in retirement, along with unique tips on how to inflation-proof your investment portfolio using our own PACE philosophy, and our 5 levels of financial freedom, which is Jerry Robinson's personal blueprint for building true wealth. If your goal is to become a better investor, increase your income, or just understand what is really happening in the global economy, you cannot afford to miss out on the vital information that is jam-packed into this 12-hour audio book. Get instant access to Bankruptcy of Our Nation in audio format right now by going online to www.ftmdaily.com/bankruptcy. That's ftmdaily.com/bankruptcy. Download your copy today and get on the fast track to true wealth and a lifetime of financial security.
Hey friends, this is Jerry Robinson from Follow the Money Weekly. Recently, we have been receiving many emails from our listeners commenting on the great help they're getting from our precious metals expert, Tom Cloud. Gold and silver are excellent hedges against the growing threat of coming U.S. inflation. Who's your gold guy? Make it Tom Cloud. With over 30 years experience with precious metals, Tom will answer all of your questions. Don't buy your gold and silver through some call center and pay inflated prices. Call my good friend Tom Cloud and speak directly with him and get all of your questions answered. For a limited time, Tom is offering free shipping and insurance on every gold and silver purchase made by our listeners. Call 800-247-2812. And when you do, tell him that Jerry Robinson from Follow the Money Weekly sent you, and he'll throw in that free shipping and insurance on your entire order. Call your gold guy, Tom Cloud, right now for the very best deals on gold and silver coins. 800-247-2812. That is 800-247-2812. All right, joining us on the line today is the architect of the Factom Protocol. His name is Paul Snow. Paul, it's great to have you on Follow the Money Radio. Thank you for joining us.
Wow, it's very, very good to be here, and I really appreciate you taking the time to talk to me.
Absolutely, Paul. Well, I've been following the cryptocurrency space for many years, and I've certainly seen your name pop up many times in many of the news stories I've read. And Factum, this protocol that you have created, I really want you just to kind of break down for us, because many people may not have heard of Factum before. They may not be familiar with your protocol. How did you end up deciding to launch a blockchain protocol? What's your background and what led you into this world?
Well, I've been in the space a long time as a promoter and educator and proponent of the blockchain and Bitcoin and the cryptocurrency space. I view it as a more honest way to define value and to trade value. And I ran into a fellow by the name of David Johnston, who's an early investor in the space, and he threw some money at me and said, I think David said, right or wrong, he said, I think you're a smart guy. I think you can figure something out. And I sat down and started working on something, and it eventually became Factum. So that's how I got here and how I got started.
What is your background? I mean, what did you study in college? How did you end up in this space?
Oh, well, I'm a computer scientist. I'm an old guy. I believe I'm the oldest significant crypto developer in the space. At least I was in 2013 when I really began. 2013 and 2014 when I began developing. I got a master's degree in computer science and electrical engineering at Texas A&M. I've largely done a lot of embedded systems, and I've been a compiler and interpreter guy, actually. So I'm big in virtual machines, big interpreters and compilers. That led to a number of projects. I actually wrote the first PostScript clone that shipped against the Adobe implementation of PostScript. It shipped into the Printware 720 printer in December of 1987. This was all during the digital printing revolution. And I have done a bunch of other stuff, a lot of embedded systems. And I ended up in 2000 or so writing the rules engine that's used by the state of Texas to do all of their health and human services stuff. So subject matter experts can write their rules in real English. They can fill out in a decision table what should happen when certain conditions occur, go do something else. It amounts to 3,000 decision tables, which is somewhere in the order of worth 30,000 or 40,000 rules if you're a rules engine guy. And they're still using it today, 18 years later, because that system exactly fits their needs. The requirements and implementation just fit so nicely. From the rules engine stuff, which I actually deployed in a bunch of other places, from the rules engine stuff, I began to see crypto, and I got into crypto. And in the very core of it is this little interpreter stack-based interpreter that Bitcoin uses. And that just drove me into how can I solve real world problems? And Factum is designed to attack the needs of enterprise. I wanted to take the same philosophy I did with the rules engine for the Department of Health and Human Services in Texas. The same philosophy, what do they really need, and build that into a blockchain.
All right. So from the very beginning in 2014, when you began Factum, as I've gone back and researched and noticed, many of the different stories surrounding Factum, you've made a big splash. I've noticed that you received grants from the Bill and Melinda Gates Foundation to create a digitized medical record system for people living in remote developing areas of the world. You've also received grants from the United States Department of Homeland Security. So certainly you have practical solutions that you're developing. Share with us what your ultimate vision for Factum is. What does a Factum world look like?
Well, it's an excellent question and framed very, very well. What happened, I would go back to 2014 when I was trying to think about how enterprise needs to use the blockchain. And I actually was targeting a different application. I was targeting the idea that we really don't know what software we're running. We really don't know who developed it. We don't really know what its components are. And inside of a computer system, we don't know where all the programs came from. So any of these software libraries that we bring into applications and any of these applications that we bring into systems carries risk of malware, bugs, incompatibilities with other versions of software, and et cetera. And so what I wanted to do was say, how do I identify all the pieces and how do I bring them together? And I started out with the idea that the observation that the blockchain, being a distributed ledger, it became a place where people developing software could say, this is my software, this is the version of my software. And people installing the software can say, this is the software that I've put on my system. Developers could say, these are the libraries that I'm using in my system. And build up a network of information that could be mined to ensure security in your computer systems, in your phones, and your tablets, but do it in an automated fashion that is super, super consumer friendly. That was the goal. Well, as I looked at that, I realized, oh my gosh, if I'm going to try to track all of this stuff, I need digital identity. I need to be able to provide identity to the developers, identity to the software programs, identities to the versions, basically tokenize who produced this stuff. And then as I worked on that and looking at mapping it, how can I put this on Bitcoin? How can I put it up on any other crypto, Litecoin, whatever was available in 2014, which wasn't nearly the smorgasbord we have today. But nonetheless, as I looked at it, I realized, one, none of this information is tokens. It is data. You might think of it as tokenized data, but it's basically data. And then two, the representations on a traditional blockchain just don't work. There's too much data. There's not enough bandwidth on the blockchains. It would be really expensive, and I would need the entire blockchains to do the audits of the data to really understand what's going on. And so what I did was I invented something I called notary chains, chains of notarized entries. Think of it that way. Well, that became Factum because notary chains wasn't nearly as good a name as Factum.
Right.
So that became Factum. So you can think of this as, if I consider a chain in Factum, because users can create whatever chains they want, they're basically creating a non-fungible token. It's a chain ID that can be used in other contexts to refer back to some information I've collected. So that chain ID can become an identity. A programmer can say, this is me, and these are the keys that I sign things with, and these are signed attestations that I've collected from other identities in the system, and I can use my keys to sign an attestation and put it into their chain, thus actually giving an attestation to another party that can be audited, because you can go down their chain and see what attestations are there. And this is at the core of what we're doing with medical records, because what I want is a patient to actually have an identity. See, you don't have an identity. What you have is a bunch of attributes in various systems of record. And anyone who can pass a trivia test of what those attestations are in various systems of record, things like the government holds your social security number, or the bank holds your bank account and also knows where you live, so that they have an address for you. And the AT&T may have your phone number. And if I have enough of these trivia questions in my pocket, the answers to these trivia questions in my pocket, I can be you, Jerry. And maybe that'd be cool, because from your picture, you're really good looking. And I would Now, that may not be an attribute I can take from you because you actually have a face. So, there are some attributes you actually have, but most of your attributes are just sitting in systems of record in various places. And in fact, even your picture is sitting in a DMV somewhere that attests that Jerry is really this good-looking guy and not that ugly guy you're talking to from Factum. So anyway, so all of this is at the basis of medical records. But then when you look at DHS, what are they doing? I need to provide an identity to the devices that assures me that this content actually came from a device and that device was at a location. I can give the location an identity. And the device can go on record where it is, and the device can then provide attestations, which are photographs and video and vibrations, whatever the sensor does, infrared, whatever. And look at where it puts DHS. Today, with raw sensors, they have data in their database, and DHS is the only identity, really. They have a system of record, and anything that's in their database is, quote, quote, true. Right? So what does a human trafficker do when they're hauled into court? They say, oh, they just invented that data. They didn't really take it. They just manufactured it. That wasn't us. We weren't there, right? And so a good bit of the proceeding is going to be arguing whether DHS has manufactured data to try to put somebody in prison, or whether it was really there, or whether there was some other screw up. But if the device itself is an identity, then their database is no longer just the system of record. It is an identity that has true attestations provided from all of these devices that prove that not even DHS could have manufactured that data. And so when they can't manufacture the data and the blockchain is the proof, that argument goes from being half of the proceeding to the first 30 seconds, and the judge says, come on, it's on the blockchain, shut up.
Makes sense. And as I look at Factum, I'm seeing so much more than just currency. I mean, when we think of Bitcoin, we think of a medium of exchange. We think of some of these others, even Ripple, being used for these cross-border settlements. But when I look at Factum, I really see the fact that currency is just the first app of blockchain. With Factum, I see you're moving into applications beyond digital currency. I see, of course, as you pointed out, the medical side. There's also the other big verticals. You got mortgages, you got insurance, you got banking. And as I look at your products, I see that you're tackling these things. It's caught the attention even of Tim Draper, who's an obvious believer in your protocol. So you're obviously moving past just simple currency and trying to create a more honest world, as your mission statement states. I mean, you're building a more honest and transparent world with the Factum protocol. It's quite astonishing. Are you noticing during this lull we've seen in the prices of cryptocurrencies, have you seen just this depression we've seen price-wise? Has that also affected the developer community? Is there less interest in the solution now because prices are lower? Or are you seeing quite the inverse? Are you seeing more development interest even as prices are depressed?
I'm seeing more development even as the prices are depressed. And when we go to investors and when we are talking to developers, certainly in some spaces in the crypto space, a lower price means fewer resources, and fewer resources means that it's harder to support yourself and to implement what you want to implement. But from the developer's point of view, there is a massive interest in this technology and a massive interest in applying this technology in various places. And with Factum itself, we're seeing a large spike in actual customers signing the dotted line and coming into our system, partly because I believe we've restructured our system to be way, way, way more attractive, particularly for businesses that are building their first POC to try to figure out how to integrate it into what they do. And part of it is that the interest in developing for the blockchain, it continues to grow, even through whatever you want to call this crypto apocalypse of price. The apocalypse where the Bitcoin price today is exactly the same pretty much as it was last year. So for Bitcoin. So I'm not entirely sure what the crying is. I know there was a spike and kind of a settlement, but it's still quite appealing, even on the price side.
It really is. I mean, the fact that Bitcoin has held stable above $6,000, and even more interesting, the fact that we've seen lower volatility amid this equity volatility we've experienced over the last few weeks, is also indicative of the fact that there seems to be some sort of undergirding technological value to these coins that maybe the naysayer may wants to reject. But there's certainly a support level we're touching on many of these coins, and even on your own coin, Factum. And, there's been a lot of developments, too, that are bullish. Of course, everybody's talking about when's the blockchain or when's the Bitcoin ETF actually going to arrive. Who knows when that's actually going to get passed. But we do know that Fidelity Investments just launched a major front on the crypto side, being the first big Wall Street bank to actually have a trading desk and actually making it available for institutional investors to have storage in a way that's meaningful and that is, some way implied to be safe. And then, of course, as we were talking off the air beforehand, there's been some major developments in China, where, by the way, Factum protocol is being used for notary services and record keeping in some cities in China. Well, why don't you comment maybe on what we've seen with Fidelity with this first trading desk on Wall Street, which is really big news, and also this latest developments we've seen with how China views blockchain and Bitcoin itself.
Sure, and they really are. I mean, it's very insightful that you put these two issues side by side, because some might miss the connection. The trading desk means that the institutional parties are now beginning to have a pathway to hold crypto assets. There's been a lot of talk for a couple of years now that funds ought to have a certain percentage, or investors should have a certain percentage of exposure to cryptocurrency or cryptocurrency companies or blockchain companies. This is a segment of the market that's expected to really hockey stick at some point. It will go up in utility and it'll go up in value. But there are other aspects that I find even companies like as interesting as a new gateway for institutional investment. And those include companies like Bitsy that are looking to provide ways for users to use a banking route, and by users I mean peons like myself. I mean, not celebrities like you. You're at a higher level, but for those of us that are just normal people and not institutions, Bitsy would use the banking institution. They have a banking license and allow people to buy Bitcoin and hold the keys. So this is really kind of key on the user side, is the ability to hold the keys while having mechanisms through multi-sig to recapture your keys and manage your security. So movements to make this more accessible to the common man, movements to make it accessible to institutions. And then in China, we also are seeing a huge movement here of recognizing that the blockchain provides absolute evidence of existence of data and can actually create evidence of provenance of data. So early in January, a digital rights case was solved using the blockchain, particularly using Factums, which we're very proud of. And basically it proved that certain content existed and a certain agreement existed in 2017, and settled the case. The case was appealed. It went to the Supreme Court in China, and the Supreme Court ruled that blockchain is evidence and you really can't argue with it. That's my summary. Technically, it might be slightly different, but it was very, very positive to blockchain, and it was based off of our own protocol, to which we're very, very proud. When the former chairman of the Bank of China opened up the Global Blockchain Summit in Shanghai this summer, he also mentioned this case and mentioned reading up on the blockchain and particularly some of the stuff that came from Factum, and is very, very bullish that this is a good thing. What this is doing is it's creating a mechanism to create proofs that survive across jurisdictional boundaries. And this is a problem that occurs anytime you cross jurisdictional boundaries, and it has sometimes been a big problem crossing into China and out of China, with them being one of the biggest exporting countries, with the biggest exporting country in the world right now. Maybe the U.S. is up there. I don't know where we are, but there's certainly competition. Having the blockchain as a mechanism to document your business processes, what your agreements are, what is provided, what hasn't been provided, and digital identity, creating actual attestations in your databases from all the parties involved. So you're not just got a list on a legal pad. You actually have effectively notarized statements from all parties without notary and at very, very low cost. Then you're talking about efficiency in business that is just massive. And all of this ties into the ability to come into the crypto space because you have on one side the funding angle, which requires parties to be able to actually hold these cryptocurrencies. You have the smart contracts that kind of cross partly business and partly tokens, and then you have the pure data business process that's going on there. So it's a full spectrum process of adoption of the whole cryptocurrency and blockchain space.
Which could really boost confidence for corporations doing business in China if they're concerned about some of the legal issues, the legal, quagmires they might get into or whatever, or some of the, maybe just the shenanigans maybe that they're concerned about. Again, goes right back to your mission statement, your vision of basically making the world systems honest and allowing corporations in the United States to deal with corporations in China in a way that doesn't depend upon some of these, some of these more fragmented systems. And I think as we bring this to a conclusion, Paul, let's speak to two different kinds of listeners today, because inevitably listening to this interview today, we have people who are running corporations, and they might be attracted to Factum's product and solutions. So maybe we can speak first of all to those people. What does Factum? How can Factum help a corporation that's wanting to maybe incorporate the blockchain into their systems? How can they benefit from this? And let's speak to the other person listening, is the individual investor. Why would an investor want to purchase a factoid, which is the cryptocurrency underlying the Factum protocol? What's the incentive from an investment standpoint? So let's speak to both the corporation who may be considering your products and services, who is the best fit for you, and secondly, why would an individual investor want to be involved?
Okay, well, the corporate side is relatively simple. I mean, one of the things that confuses a lot of people when they look at Factum, where we're talking about DHS, we're talking about mortgages, we'll talk about medical records, we'll talk about applications to document agreements between individuals. There's just this whole spectrum, and it looks like a complete lack of focus. But what Factum really does is Factum is providing value in data, because for the first time, instead of you simply having a legal pad where you've collected things you've observed with the exact same legal weight, sometimes it is very good that you have a list and you've documented things, but in the end, you don't really have proof that any of the other parties agree with your observations in time. We've all known that guy that's taking notes while he's talking to you because he's building an argument, and then he says stuff and it looks like he's mischaracterized everything you said. And that is the emperor has no clothes. That's where databases are today. So where you can create digital identity and get signed attestations from devices like DHS is doing, signed attestations from testing services and from patients that are authorizing access to particular categories of documents. You are getting greater patient privacy. You're getting greater accuracy of data because by the way, it's really important to have the right medical records when you see a doctor. Who knew? And so if I look at each of these silos, like medical care to take one, and the financial sector, you would think I'm either attacking one or the other. But here's a dirty little secret nobody knows. You actually have to pay for medical care. And that's actually in the financial sector. So where we've created greater trust in finances, we're also creating greater trust in medical systems, and you're also creating greater trust in the insurance process and in the process of payment. So I'm seeing this as basically why someone would look at Factom and say that's an exciting technology. And by the way, since we actually do, because we didn't talk about this, but I'll just at least make a statement. We really do separate the token trading from the act of writing data. So the data is really pure data. So those identities are not tokens; they're actually tokenized data, and those identities can actually sign attestations, which is essentially a tokenized proof that they agreed to a certain thing has happened, or they agreed to a certain element of an agreement, and you end up with a business process that, at least in China, I can definitely put in front of the court, and they will accept it as proof of what happened, and I believe that all courts will accept it in short order. Now, going to the individual investor and why you would want to have a Factom token, we believe that it's the utility of the protocol that's reflected in the token. If you believe that there's utility, then that is maybe one reason somebody might want to hold a token. We do not believe in pumping. So in some sense, in the crypto space, I call ourselves the greatest stealth project that goes to every conference and tells you exactly what we're doing. Because unlike everyone else, we seem to show up at a hype fight with utility in our hands. And that's maybe not very fair because we can't compete with a lot of the hype that goes on in the crypto space. But we are building real utility for the real world. And part of that, too, is we're talking about, we don't have time to talk about this, but a network of peg tokens and stable tokens that open up the financial system to the unbanked, to the developing world, facilitate payments between parties all around the world, first world, second world, third world, or fourth, it doesn't really matter, gives everybody a level playing field for payments, for remittance, and even for investment. And we're really excited about that. Gave that presentation at the Texas Bitcoin Conference. It can be found online if you go to texasbitcoinconference.com. So.
All right, my guest today has been Paul Snow. He is the CEO and architect of the Factom protocol. Paul, in our final moments, for those who are interested in learning more about Factom, what's a way they can get a deep dive on your protocol? How can they learn more?
Well, you can come to factom.com. You can go to and you will learn all about Factom Inc., the company. The Factom protocol, one of the best places to go is Reddit/r/Factom, and the pegged post at the top has links to everything, links to our source code, links to all the companies that are involved in running, or at least most of the companies running the protocol itself, as well as businesses and articles and all sorts of other resources. So learn about the protocol on Reddit at r/Factom, and learn about Factom, the company, at factom.com. And also go to the texasbitcoinconference.com, where the Factom Summit held a whole track, and there's many presentations there.
And I got to give you props on the Factom University, by the way, factom.com/university. I was so impressed by going through it. Not only do you explain Factom itself, but you also give users and new people to blockchain a great immersive opportunity to kind of get their arms around what's going on. So I also want to plug Factum University. What a great job you did on that.
Wow, I need to hire you. You're remembering all the things I'm forgetting. Yes, we are proud of Factum University, and we're looking to add more content to that.
Fantastic resource and for free. So we'll provide a link to that in our show notes. Again, thank you, Paul, for being here. God bless you, my friend.
Thank you very much. I appreciate it, Jerry.
All right, friends, that brings us to the end of our program. Thank you so much for tuning in and letting us be a part of your life right here on this broadcast. And as always, I'd like to leave you with a final thought. It is taken from the book of Proverbs, written by the wise King Solomon, who said in Proverbs 22, verse 7, "The rich rule over the poor, and the borrower is a servant or a slave to the lender." I would imagine that the global financial institutions are shaking in their boots as they realize that cryptocurrencies like Bitcoin could create less demand for debt-based fiat paper money. Our system is debt-based, and cryptocurrencies provide an alternative to a debt-based monetary system. When you consider the world's more than $100 trillion of combined outstanding debt, you can see why cryptocurrencies, as not being debt-based assets, have such a compelling story. And that's just something to think about. Remember, friends, when you want the truth, just follow the money. Have a safe and prosperous week, and we'll see you right back here next time. Till then, God bless.
All of the information contained on the Follow the Money podcast is strictly for informational and educational purposes. It should not be construed as specific investment advice. The views and opinions of our guests and sponsors, including Tom Cloud, are their own and do not necessarily represent the views of FTMDaily.com or Robinson Media Group, LLC. Jerry Robinson does hold an insurance license and at times may offer consulting on life insurance and fixed retirement income products. Follow-up, individualized responses to email or phone requests that involve the rendering of personalized investment advice for compensation will not be made absent compliance with state investment advisor registration requirements or an applicable exemption or exclusion and applicable insurance regulations. Past performance is not indicative of future results. You should be aware of the real risk of loss in following any strategy or investment discussed on the podcast. Remember, never do your financial planning through podcast or radio. It's your money. Be wise. Do your due diligence and always consult a trusted financial professional before making any financial decisions.